The S&P and global markets have definitely declined significantly in the last couple of weeks. Can we expect to see this reverse? However, is this a good buying opportunity? Well, it could definitely be. However, is it time to be getting in now, or should you leave it a bit longer? In this video, we're going to be looking at some of your favorite stocks, including Palantir, Supermicro, NVDA, SOFI, HIMS, and Alibaba. These will help give us a broad understanding of where the market should be moving in the next couple of weeks. Hopefully, it's going to start to reverse soon. So starting off with Palantir on a day chart here, I have an intrinsic value set only at $8.83 for Palantir. So obviously this stock is massively overvalued and it is starting to decline massively as of recently. Of course, this is actually a good thing for Palantir, as it just means that this stock is going to be a bit more sustainable going forward. It could actually offer a good buying opportunity despite them being massively overvalued. On a discounted free cash flow analysis on a 9-year basis, I have them to be valued in at $83, which is roughly where we are now. So that means that Palantir is basically 9 years ahead of where they should be intrinsically. But that doesn't mean to say that it's not a good stock to be buying into. It just doesn't have natural intrinsic growth yet to come. We are now in a short position on the MACD indicator, and if we look on the moving averages, we can see that we are well above all of them, apart from the 200-day and the 100-day moving average. That's the other way around, sorry, it's above the 50 and the 20-day, but the 200 and 100 are now below the current price. So that could suggest that we could expect to see a bit of short pressure yet to come in this stock. However, we are still above this 50-day moving average, which is a very bullish indication. But of course, we are seeing this price massively fall down as of recently. And if we go to a 15-minute chart, we can see that we are below all of them now, apart from actually the 20 and 50-day still. And we are just barely above the 100-day now. On the MACD indicator here, we can see that we are now in a long position. And if we look on this indicator here, we can see that this is actually also in a long position, suggesting that it could be a good time to buy for early next week. But personally, I can't recommend buying into Palantir with them being at a 446 PE currently and a 0.19 EPS of $84. I just don't think that it is something in which I can recommend with any certainty, as it is obviously massively overvalued. And with the market just falling week after week, day after day at the moment, I can't recommend getting into Palantir. I feel like the stocks with the higher PEs are going to take the larger runt of this fall. According to my breakout indicator here, we are seeing a lot of these stocks are still expected to just continue to decline next week, so that could definitely be a good indication. However, that doesn't yet mean to say that that is going to happen. And one stock in which I have been very bullish on in the past is Supermicro. Now, this stock has obviously seen a massive decline since its peak on the 19th of February, with a decline of approximately 50% almost. We are expecting to see this stock continue to decline, in my opinion, as the momentum is just behind the short sellers at the moment. And we are now below all of the moving averages, which just puts more pressure on this stock. On a 15-minute chart, we are now above the 20 and 50-day moving averages, suggesting that early next week, we could see a bit of buying pressure. However, that's not enough for me to actually really push that. On the MACD indicator here, we can see that we are in a long position as well, which just further backs up what I've just said. With a PE of only 16.63, I do think this stock is still a massive bargain, as I have their intrinsic value to be set at $129, which is obviously massively below where we currently are. And I have their discounted free cash flow to be set at $453. So there is a lot of room for growth in this stock. But of course, this stock has had a lot of controversy in its past and therefore has seen a lot of selling pressure previously. And I do think that it is a bit of a almost suspect stock. It's something that people don't really like to leave their money in, as it's something in which you can't really rely on too much. But with that being said, I still do think this is a really good stock, and if you're in it for the long run, I wouldn't be selling your position in this. In fact, this is probably a good opportunity to be buying more. But on the short term next week, I do think we might see some more selling pressure. NVIDIA has also seen a lot of selling pressure in the last couple of weeks. It is a very volatile stock at the moment, with it having a lot of sideways action, and I don't think this is fair. I think NVIDIA still has a lot of room for intrinsic growth, as for this year's growth I have them set at $187. I just think this stock has a lot of room to grow into. We are now in a short position on the MACD indicator, and if we look on the moving averages here, we can see that we are now below all of them. Of course, I think this stock does deserve to jump back up, but will it next week? Possibly not, maybe towards the end of the week. But again, at the moment with stocks, it is very geopolitical. It's not something in which the stock themselves the company themselves can really help. So you should only take this with a pinch of salt, what I'm saying, because it could mean absolutely nothing when it actually comes to what happens geopolitically, especially in the state of the world at the moment. But with NVIDIA only being at a PE of 38, I think this is an absolute bargain to be buying this stock at the moment. I do think long term, of course, this stock is going to do absolutely fine. And on a 15-minute chart here, we can just see that this decline is only continuing. But we are now in a long position on the MACD indicator. But again, does that really mean anything at this point for this stock? Possibly not. But this is a stock in which should climb up to the $300 mark by the end of 2026, in my opinion. So I think that if you are looking to buy into this stock right now, this is a perfect opportunity. So another stock in which I think has been beaten down and fairly recently is SOFI. I have their intrinsic value to be set at $104 for this year's growth. However, with the interest rates not exactly helping this stock recently, we have seen a lot of selling pressure, but we are now below all of the moving averages apart from the 20-day moving average on the 15-minute chart. When we look on the daily chart, we can see that we are above all of them. We are above the 200-day and below all of the rest. So that is again a really bearish indicator, and it is forming somewhat of a head and shoulders, if you believe any of that, indicating that we could see a lot of selling pressure in SOFI stock. Furthermore, on the MACD indicator, we can see that we are now in a short position. Personally, I think this stock is going to see a bit of selling pressure, but I do not think it's fair at all. I do think this stock should go up, but this could be a really good buying opportunity. Next week, I think we might see a lot of sideways action in this stock, but again, it could be a very good opportunity to be getting in for the long run. SOFI being at 32 times earnings, in my opinion, is a really good price to be getting in at. And again, intrinsically, I have this stock to be set at $104 for this year's growth. So maybe it's only a matter of time before the rest of the market catches up with the stock and it takes off massively. But again, that might not happen this year. That could happen in 1 to 2 to 3 years time from now. But if you're getting in now, this is probably one of the best buying opportunities to be getting into SOFI. But short term, I think you will see your money possibly decrease. Long term, I think it will be perfectly fine. So Hims and Hers is a stock in which I was also bullish on in the past and jumped right up to the valuation in which I set it at, and since then it has fallen down a massive 50%. Is that justified? Not really, but it kind of also is. Of course, the stock was massively hyped up in the last month and now has obviously seen a lot of selling pressure. It's not sustainable for a stock to jump up. I think it jumped up over like 100% in like a couple of weeks, which is just unsustainable, of course. So we are now obviously seeing a lot of selling pressure. I have their intrinsic value to be set at $50 for this year's growth, so it is now looking to be somewhat undervalued. And on a discounted 9-year free cash flow analysis, we can see that the stock is worth $315. So this could also be a very good time to be buying into Hims stock, but I don't think you're going to see any returns in this stock in the next couple of months. I think the hype has just died off of this stock now. I don't think it's something in which you're going to buy into and expect it to jump straight back up. That would be very unrealistic. The stock is now below the 50-day moving average, suggesting that there is obviously going to be more short selling pressure on this stock. And if on a 15-minute chart, we are below all of the moving averages except from the 20-day moving average. And on the MACD indicator, we are now actually in a long position, but I don't think that will stay in a long position for much longer. Ignore the motorcycles riding past my house if you can hear them. Of course, they have a PE ratio currently of 67, suggesting that this might not be a particularly great time to buy into the stock. I do think we are going to see the stock continue to fall down a bit longer, and I think it will be a brilliant buying position, but I can't recommend to buy into this right now, especially with the overall state of the market at the moment. But if you're looking to hold this long term, it will do perfectly fine. And finally, we have Alibaba. Now, this stock has just done exceptionally well over the last couple of months and weeks. We are now massively into a long position, and a few days ago it was actually indicated to be a good breakout stock, and it still is on my system, with the only negative being its volume is currently down. But apart from that, this stock seems to be doing absolutely fine. This stock could be one to momentum trade, however, intrinsically the stock has now died. For this year's growth, I have this set at $118, but on a discounted free cash flow 9-year analysis, I actually have this stock to be priced in at a massive $5,382. So we can expect this stock to go absolutely ballistic in the next couple of years, but I don't think that's actually going to happen, as of course it is a Chinese stock, and politics have a large impact on stocks such as Alibaba. But if you're looking to get out of American stocks, this is possibly one of the best. I do think we are expecting to see this stock start to see a lot of sideways action and potentially fall down. So if you are holding Alibaba, it might be one to put your stop losses into, as again, I don't see this being massively sustainable. But as of this recent breakout, this stock has climbed up nearly 80%. So if you are holding Alibaba and did get in from the start, then very much well done. You've done very well on your returns with this, and I have been in and out of this stock. I did actually get out around here as I saw this as the end of the peak, but the stock just continued to do really well in the demise of the American market. But despite this, their PE ratio is still only at 20, and their earnings per share is at 6.88 at 140. So it does actually seem to be still a relatively undervalued stock. Intrinsically, I don't have it to be undervalued, but currently looking at the current valuations, according to the PE ratio, it looks to be fairly valued. But I do still expect to see this stock have a lot of volatility going forward. It could definitely still go up, but it could also fall down quite rapidly, much like Hims and Hers and Supermicro did, as sudden growth like this is typically not that sustainable. So I hope you have enjoyed this video and found it somewhat useful. If you have, please do hit the like and subscribe button. It would be greatly appreciated. Follow my X in the description if you would like to keep up to date in exactly what I'm looking at. And with that being said, I'm not a financial advisor. This is not financial advice. You should always do your own research before buying into the stock market, as when you do, your capital will be at risk. With all that said, I hope you have enjoyed, and I'll see you for the next video.